Hey everybody, this is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, March 16th. Before diving into the charts, recap of last week's trading ended up only having two trades. Both were losses, and one of them was a totally controlled loss within my normal parameters, just over $1,000. The other one ended up actually kicking me in the face because a day trade, or what was supposed to be a day trade on Bitcoin futures last week, or excuse me, week before last on a Friday, ended up getting distracted because I had a couple of contractors come over to the house to do some work outside, and I was out talking with them, and the market closed on me before I ended up closing that position. So huge, huge mistake on my part. Just got distracted with life stuff and just was not paying attention how I should with an open contract like that. Ended up being forced to hold over the weekend and it gapped down on me. So I ended up taking a large loss on that. Total loss was $18,050 for the week, which I absolutely hate, but it is still within my normal day-to-day rhythm in terms of overall profit and loss ratios. I hate losing that much on a single trade, but I have worked diligently over the last 8 years to build my account to the point where I can handle that and continue on with my normal trading. So this week, I am most likely going to be taking a little bit of time off, trying to resize up the market. I am expecting, if as we dive into the charts here, looking at the S&P, for the market to bounce, likely going to come up and retest the all-important 200 period moving average on the S&P 500. That is around 573. If we do get some momentum and break through that, I am assuming that we are probably going to find a petering out of that momentum around 580. And the other scenario, if we don't get that bullish momentum coming back in, would just be to consolidate and go neutral here for a few days. I think for the most part, the downward pressure has alleviated itself just because this has been such a steep, drastic decline. Actually, looking back in history, this is one of the top 5 or 6 quickest decreases of over 10% the market has sustained in at least the last 15 or 20 years of data. So, anyways, we are way overextended the downside, not only on a price action perspective, but also on our RSI. Our MACD is starting to slow down a little bit, although it is firmly in the bearish territory here. So again, base case, either neutral for a while and then potentially another leg down, depending on if we get any bullish catalysts in the market, especially from the Fed rate cut meeting this week, or not rate cut meeting, rate meeting this week to see if they cut or not. Base case for that is they are probably not going to decrease. The most likely outcome by about 99% is for them to just stay exactly where they are. Going on to the Nasdaq. Nasdaq basically rinse and repeat the exact same thing from the S&P 500. If I clear out my drawings here so we can see it a little bit clearer, we're below all moving averages. Our RSI and MACD are basically identical to that of the S&P 500. Similar price action here. I wouldn't be surprised to see price bounce up to about 493 or 494, coming up to that daily 200. But past that, I am honestly looking for new shorting opportunities in the market. This is not a buy the dip mentality. This is a sell the rip mentality. So when I see price come back up into any of these important moving averages, I am going to be looking for slowing momentum on the intraday time frame and probably looking to open new short positions to profit from downward movements. Going out to the Russell 2000, basically rinse and repeat, exact same thing. You'll see pretty much everything here that we look at today is going to be overextended to the downside on RSI, with the MACD firmly in bearish territory and starting to slow down slightly, and a big gap here between current price and the 200 period moving average on IWM, which is around 218. Going out to Dow Jones, this is the only one that doesn't have a significant gap here between current price and the 200. Right now, price is trading at 415 from the close of Friday, and 419 or almost 420 is the 200 moving average. So this has less room. If I am interested in playing the bounce this week, I will be looking at one of the 3 other indices that we've already looked at, but I will instead most likely be just waiting for whatever bounce occurs to run out of steam and then positioning myself to the downside instead. Going out to IBIT, this is the Bitcoin ETF that I track. Bounced off the 200 period moving average. We are in kind of a neutral range right now. If I am looking at this from a trading perspective, I'm probably not going to be interested in trading that this week. We will see unless I get something that just screams at me overextended to one side or the other. We are pretty overextended on the downside here, and we actually are seeing some more stability come into the RSI, even though we've had a ton of pressure in the actual price chart. But I just don't like the look of this, and it really needs to get back above the diagonal here for it to be classified more in neutral territory. And I'm not going to be bullish until we really get back above $53 and about 15 cents. Going out to Ethereum, obvious downtrend, nothing to see here. I think any price bounce in Ethereum is going to be muted as long as pressure remains in the market. This is probably not a shorting opportunity anymore, but I am not interested in anything bullish at this point on Ethereum. Going out to XLB, we got our breakdown that I've been calling the last week or two, ended up coming back up, retesting it, and then selling back off. Our target was 84.13. We almost hit that to the penny. In terms of our RSI, we didn't quite reach overextended to the downside territory. Now we are trying to bounce, and we do have a little bit of a diagonal here on the RSI that is threatening to diverge. So we may have a short-term bottom here. Not going to call a long-term bottom, but we may have a short-term bottom with a little bit of a bounce, probably coming back up into around $88. Going out to XLY, pain has hit XLY. Discretionary is not a good place for the bulls right now. Pressure has been immense. If we toss this out to a weekly chart, you can see momentum to the downside and a close last week below our all-important 50-period moving average there, right at $200. Honestly, a little bit of a bounce wouldn't surprise me, but I am assuming that we are probably destined to come down here into the 183 level over the next couple of weeks before we find an actual bottom to this downward pressure. Going out to XLK, rinse and repeat the exact same thing. Probably looking at a bounce here, most likely back up into the 220 to 223 level. If we go out to XLE, nothing to see here at all. This is just a choppy mess. All of our moving averages are clustered really, really tight, and we just keep dancing back and forth on either side of that cluster of moving averages until we get a decisive move back above this diagonal resistance line. I am just looking at this as a stay away. Going out to XLU. This is utility sector ETF, and if we toss this out to a weekly chart, remove our drawings here, bam, so we can see it a little bit clearer. We did end up recovering our moving averages on the weekly time frame, which is a nice development, but again, on the daily chart, not much to see. Going out to XLP, consumer staples, ended up having a pretty significant sell-off here after a really nice rally over the last few weeks. Last week was just a disaster for consumer staples with deteriorating sentiment in the market. RSI still has a little bit of room to drop. The MACD is in bullish territory, but had a cross, which is a warning shot across the bow that pain might be coming. That did end up being the case last week with a significant sell-off. Now this is in an area where I am no longer interested in shorting, and I am no longer interested in going long for the time being. Going out to XLC. XLC overextended to the downside, has had a massive sell-off here from 105 down to 96. Tossing it out to the weekly chart, we have broken our moving averages here. I am expecting that over the next couple of weeks, we will probably retest the 50-period moving average on the weekly chart at around $91 or maybe $92 by that point. Going out to XLI, XLI has crossed below its 200-period moving average on the daily chart and below a longer-term diagonal support and resistance line here shown in blue. Not interested in playing a bounce in this. I might be interested in shorting a bounce in this once it has occurred, but right now it is a stay away. Going out to XLF, we did end up having the sell-off in XLF, even though this was the area of the market that was showing the most strength going into last week. At the beginning of the week, we gapped down and then selling pressure took hold, and it has just been a smoke show ever since. Going out to XLV. XLV, I've been saying, has been the one area of the market that I might be enticed for some bullish trades. if it cooperated. And we had some consolidation here for a few days with a couple of wick highs that if we had closed above that level, correlating to previous pivots here and here on the left of the chart, that could have been a bullish trigger. Instead, resistance held and got knocked down. Now this is kind of in a neutral, jumbled mess and not interested in trading it either. Going out to gold, gold is pushing higher, but it does have a little bit less momentum than I would like to see. And honestly, this is probably going to just pause underneath 280. Eventually, probably will break 280 to the top side. But I am already fully allocated to gold, and I'm not interested in looking at any more. Going out to XLV, or excuse me, SLV. This is silver ETF, and I am expecting more bullish momentum to come, but I would love a 2 or 3 day pause, pulling back down into the $30 level to give a lower risk entry to that trade. So I will be watching silver, looking for some kind of a flag-based 2 or 3 day pullback pattern. Last but not least, going out to the dollar. Dollar just chopping sideways here for the last week or 6, 7 days. And I would not be surprised to see this continue its momentum to the downside after this oversold condition is alleviated. Last but not least, let's go out and check out our FinViz heat map here. This is a 1 week performance looking at the market overall. Honestly, not much green here. The only green that we are seeing is coming in places that have just been absolutely smoked over the last couple of weeks, like Nvidia, Berkshire, a couple things like that. Other than that, selling pretty much everywhere. Last but not least, if we go out and look at our economic data for Forex Factory, we can see a heavy week of information coming at us. Focus for me is going to be on Wednesday with the FOMC meeting, statement, and press conference. With that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Give me a like and share if you want to, and I will see you next week.